What is going on, everybody? Estas here. So we had a pretty okay day. Honestly, it wasn't the best day in the stock market today. The S&P went down 0.5%. The Russell got clobbered. It went down almost 2%. We had the NASDAQ 100 up 0.25%, and the Dow ended up going down 0.75%. So today, we're going to break down some stocks, some charts, my thoughts on the markets, plus more. So sit back, relax, hit the like button, subscribe, check out my Patreon down below if you guys want all my buys, sells, call outs, morning update videos, plus more. All of that's on Patreon. And with that being said, let's get right into the video. So SPY, which tracks the S&P 500, if you guys don't know, you probably do, it hit an all-time high yesterday of $458.49. And this morning, it seemed like we were going to consolidate a bit and break out. And once we started doing that, you guys can see here on the intraday chart, SPY consolidated at about 455, 456, and then heading into about 2 p.m. on the East Coast, it did start climbing. Once we saw that, boom, we got a big dump from 457, and that occurred at about 2:20 p.m. on the East Coast. We went from 457 all the way down. Now after hours, we are under 454. And by the looks of it, it's pretty obvious here going back to that 4-hour chart. Let me zoom in a bit. We are now trading under that 455 all-time high from the beginning of September. And it's not the end of the world for the bulls, guys. I mean, look, the trend, it's still uptrending, right? We're still above both moving averages. We're still seeing a golden cross here very clearly on the 4-hour chart. We're just shaking out some weak hands. It's just some profit taking, and we're seeing a bit of a retracement towards those moving averages, right? You guys notice how we pulled back pretty much right to that 50 moving average on the 4-hour chart. So I'm going to be looking tomorrow and for the rest of this week, next week as well. I want to see if buyers start stepping in around the low to mid 400 or 450s rather, right around this 50 moving average on the 4-hour chart. And we did talk about this in my video from earlier today, but I'll cover it again. QQQ hit an all-time high today. It hit $383.15. And if you guys were watching the markets yesterday, this got about exactly 7 cents shy from all-time highs. And today we finally pushed through and hit that fresh all-time high. We essentially filled the gap all the way from 378 to 383. Now we're pulling back a bit to 380. And like SPY, QQQ is still looking very bullish. We're simply pulling back within the overall uptrend. It's nothing out of the ordinary, guys. Really, it's nothing out of the ordinary. In fact, it's very healthy. It's healthy to see, ETF stocks, whatever it may be, push up and then see those little pullbacks within the overall breakout, which again is kind of what we're seeing right now. So let me know your thoughts down below in the comments. What did you buy today? Are you bullish, bearish? Are we heading lower? Or is this just a little mini pullback before the markets completely break out, heading into tomorrow where we're reporting a lot of the big tech earnings? We got Apple and Amazon. And we already had Google, Microsoft, and Facebook. So let me know your thoughts down below in the comments. Make sure to also smash the like button if you guys find value. Let's try and get at least 150 likes on this video. So let's do that. And with that being said, let's talk, because today we had some earnings reports and we got to go over them. Do you guys remember Spotify? I'm sure a lot of you use Spotify. I just got onto Spotify very recently, actually. I've always been an Apple Music kind of guy, and I still use Apple Music a majority of the time. But now I'm on Spotify for certain podcasts. The Joe Rogan podcast. That's pretty much the only one that I listen to on Spotify. But there's a couple of other ones, here and there if I see one that I want to look at or listen to rather. And they've been, the stock's been clobbered. If I pull up SPOT, this was a $390 stock pretty much back in February, and it cut in half all the way to 200 back in August. So from February to August, it went from 390 to 200, and now we've slowly been gaining steam the past 2-3 months. It's gone from 200, and it opened up, I believe, at closed at yesterday at about 250. Now we're trading in the 270s. So they reported pre-market, and by the looks of it, the stock going up 8%, $20 per share on the day. Yep, you guessed it. They probably did pretty well. So let's pop up the live news tab and see exactly what they ended up reporting. And mind you guys, this is not an American company, so keep that in mind. They did 41 cents in the red for Q3 EPS and revenue of $2.5 billion. Monthly active users came in at 381 million, which is up 19% year over year. And for a company like Spotify, they got to grow those monthly active users every single quarter, year after year, which up 19%. That's pretty good year over year for Q3. And they actually upped their guidance for Q4. They see revenue of 2.54 to 2.68 billion and monthly active users between 400 to 407 million. So even quarter over quarter, not just year over year, but quarter over quarter, they're expecting to grow monthly active users and revenue, which is always great. And I always talk about this, guys, when we're going over stocks during earnings season, companies during earnings season. It's very important, of course, for EPS revenue for the previous quarter to beat, right? That's always great. But it's even more important, and you guys will probably agree with me here, for guidance to be spectacular. Maybe not spectacular where it's like, oh, they're blowing guidance away, but at least guidance higher than the estimate guidance, which in this case, it's looking pretty good for Spotify. The fact that they guided up for the next quarter, I'm loving it. And I've been on record saying that $280 to $300, I believe, is the breakout spot for Spotify. Hence why my alert is set at $300, $280 rather. And you guys can see that's where we've seen selling pressure between $280, $300 over the past 6 months, so about half a year at this point. You guys can see we've actually got rejected at $280, $300 once, twice, 3, 4, 5. And will this be the 6th time? Time will tell. I don't know if it will be, but I'm going to be watching it for sure, because I think if we end up getting out of $280, $300, now we're talking $325, $350, maybe even higher for the stock price. That's where I think it's going to be headed. So Spotify is looking great. Solid day. Good earnings report. And oh, wow, look at this. This is why it's always important to look at multiple time frames. Look at this 3-year chart. Let me erase that alert so we can see it a little bit clearer. I'll actually put the alert back on tomorrow, maybe later on tonight, whatever. It doesn't matter. But I'm looking here and I'm seeing a clear-cut head and shoulder. Look at that. Wow. Good thing I spotted this on camera, guys. Look at this. We have a neckline at about, it makes sense, 280, 300, which is that sell target, or not the sell target, but where we've been getting selling pressure. So this makes it even more important for Spotify to break 280 and 300. So while I'm at it, I'm going to set one alert at 280. I'm going to set the next alert at $300 per share, and we're going to be watching what it does at those two levels. So Spotify, if you own it, you've been getting destroyed. I understand, even though I'm not in Spotify, I understand how you feel, but today you're feeling good, and the tides could slowly start. They could be turning here. So, yeah, Spotify's solid. eBay, let's see what they did. They reported after hours. Oh, by the looks of it, the stock's selling off, guys. We went to $73 now after hours. We close a little bit above $77.60 at the market close. And if I pop up this live news tab, let's see what they reported. They did 90 cents versus 89 cents estimated for EPS, so they barely beat EPS. And sales also beat. That's pretty solid. $2.5 billion versus $2.46 billion estimated. And they see, okay, let's look at this guidance. Q4 adjusted EPS of 97 cents to $1.01 versus the dollar estimate. So that's what they're seeing for EPS, pretty much in line with the estimates there. Sales are looking to be 2.57 to 2.62. Here we go, guys, versus the 2.65 billion estimated. So they guided a bit lower on sales for Q4. And annual active buyers I'm seeing here declined by 5% for a total of 154 million global active buyers. And I'll be honest with you guys, I've been a seller on eBay. I've sold a lot of things on eBay in my past. I haven't really been doing it as of late because I feel like my time is much better spent making videos, trading, selling calls, buying stocks, whatever, these days. But back in my college days, even in late high school, I was huge with selling on eBay. I've sold a lot of stuff from flipping, this, that, the third. We won't get into it in this video, but I've never been a buyer on eBay. Literally, I don't think I've ever bought anything on eBay. I'm not even kidding. So maybe at this point, it's seeing a bit of a hiccup with that. I'm not sure if this is a long-term thing for the company with active buyers declining 5% this past quarter. I don't know if this is going to last or if it's a short-term hiccup, but I know a lot of you guys are like that as well. You go on eBay, you sell things, but you don't really buy much of anything. Or maybe that's just me. Let me know in the comments down below, but as of now, the stock is selling off. It clearly broke under that 50 moving average on the 4-hour chart, but it's hovering around the 180 moving average. It seems like the uptrend on this 4-hour chart is continuing. So I want to see if buyers maybe start stepping in around the low to mid 70s. That would be a very interesting spot to keep an eye on. So that's eBay. Align is another one, which, guys, look at this eruption here. Align closed up 2%, and I believe I made a video yesterday, or maybe that was the day before, going over 3 oversold stocks to buy, and Align was one of those. And I mentioned to you guys, wait for earnings, it might pop, and now it's popping like crazy. We closed above 604 at the close, and now it's trading above 650. So let's see and dig a little bit deeper here and see what they did. Let's see here. Where's the EPS, guys? Where's the revenue? Come on. Oh, here we go. 287 of EPS versus the 260 estimate. Sales came in at 1.02 billion versus 977.8 million. So double beat for Align on EPS and revenue, and they guided up, it seems like. Wow, it's pretty good. Actually, it's not that big of a guide up. It's pretty much in line. They see full year 21 sales of 3.9 to 3.95 billion versus 3.94 billion. So they didn't really guide up there for full year 21, but it looks pretty in line with the estimates, and they expect roughly, again, 3.9 to 3.95 billion for the full year 2021, which is not too shabby. I want to see, though, what's their Q4 guidance. Maybe they're not giving us the Q4 guidance, which I would want to see. Oh, they're looking to, okay, look at this. This is always good as well. Align Technology expects to repurchase up to $100 million of stock in Q4, which that's probably a reason why the stock is jumping as well, because typically when companies are buying back stock, we could go on a whole side tangent here, but I'm going to keep it short. They believe they can get more return on their capital by buying back the stock. In other words, they might think the stock's a bit undervalued, so they're going to buy back the stock as opposed to putting that money into, let's say, marketing, research and development, things like that could grow the business, if that makes any sense. So in a nutshell, they're buying back $100 million of stock, which is solid. If you're an active shareholder in Align Technology right now, which, full disclosure, I am not, but if you do own Align Technology, you should like that, because your piece of the pie, essentially, when they buy back shares, take shares off the market, they are increasing your piece of the pie of the business, right? In a nutshell. So Align Technology looks solid here. It is running like crazy after hours. It is overbought now, so be careful. But overall, the trend on the yearly chart is looking solid. It's uptrending. On the 3-year chart, it's looking solid. And with after this report, we could continue this move up to 700 plus over the next couple of weeks for sure. And Ford is another one, ticker symbol F. Ford ended up pulling back from 1670 to about 1570 over the past couple of days. And it's interesting because the previous high on Ford was back in June. You guys can see it here where it went parabolic. That run actually started in the middle of May. It went from, geez, guys, look at that, $11 all the way up to $16 in less than 3 weeks. Pretty much 3 weeks is what it did there. It went up about $4 or $5 per share. And then it saw a bit of a pullback, and we actually called out this breakout. If you guys remember, if you're in my Patreon, if you've been watching my videos, we called out this wedge breakout on Ford, and it's gone ballistic since. It went from 13 now up to 1670, and recently, like I said, the past couple of days, it's pulled back a bit, and now it seems like it's moving up after hours. So this trend looks great. I think ultimately, and I'm going to put my alert right now at 1650, I think ultimately we will end up breaking out on Ford, maybe towards $20 per share, which I'm not sure. When's the last time Ford was $20 per share? Let's pop it up here. It looks like, oh wow, guys, look at this 20-year chart. Actually, this is the all-time chart for on ThinkOrSwim for Ford. $17 is a huge resistance stemming back not only from earlier this year, no, but also from years ago. Look at this, back in 2014. 2013, we struggled at $17. 2010, we struggled at $17. So even back in, if we want to go back to the 80s, guys, which this is crazy. I mean, that's pushing 40 years ago. But Ford struggled at $16 back in the 80s. It struggled at about $16, $17 in the late mid-90s as well, before it ran up to almost $40 per share. So needless to say, guys, Ford's got to break 17, and if it does, which I believe it will, now that we're seeing the Ford F-150 electric vehicle, all their plans around them competing with Tesla, which I believe they are going to be a pretty solid competitor to Tesla, I think that's going to launch them to $20 plus. Now, do I know when it's going to happen? Absolutely not, but I think it's coming. And before I even forget, which I rambled on a bit there, let's look at what they did for earnings. Let me see here, guys. Let's pull it down. They did 51 cents versus 27 cents estimated, and sales beat. Wow, look at that sales beat. Let's go. Ford ended up doing Q3 sales of $35.7 billion versus $32.5 billion, so they double beat sales and EPS. And let's see with guidance. Anything on guidance here? I'm not really seeing anything. Oh, they raised full year 21 guidance. Where is it though? Okay, they raised earnings before interest tax guidance from 9 to 10 billion. Oh wow, that's a big raise there, guys. Full year 21 adjusted revenue seems to be going from 9 to 10 billion originally. Now it's 10.5 to 11.5. So I'm surprised Ford's not ripping even more on this news. But then again, the stock's already rallied a lot. So I'm assuming some of this was already, if not all of this was already priced into the stock. And let's see here. Did they raise their dividend? Oh, they're going to resume. Ford to resume the 10 cents per share dividend. And Ford previously disclosed quarter dividend was at 15 cents a share. Wait, didn't they cut their dividend during the pandemic? The beginning of the pandemic? Let me see on Yahoo Finance. I think they cut it. Now are they reinstating it? Maybe I'm wrong on that. Yeah, here on Yahoo Finance it says not available for their dividends. So it seems like they're bringing it back, which is solid for those dividend investors out there. So shout out to Ford, guys. It's looking pretty solid, man. It's looking like we're turning around. Let's take a look here at Teledoc, TDOC. This is a classic middle of the pandemic stock. You know, you got Teledoc, you got, what are the other ones? Zoom, you got, there's so many we can name. I'm not going to dive into that now, but these stocks have been destroyed. I mean, look at this 3-year chart on Teledoc. It ran from $70 in 19 to 308 in the beginning of 2021, and now it's cut more than half. It's actually down close to 60%. Now it's trading at 138, and don't even get me started on Zoom, guys. This one hit 588. Now it's at 250 to 270. This one's down 60% as well. But in this video, we're going to be focusing on Teledoc because they just reported earnings and the stock is selling off about $6 here after market hours, meaning they probably didn't do that well with earnings. So let's see here. They lost 53 cents per share, which beat the 65 cents per share in the red estimate. So that's a nice beat there. Sales came in at $521 million versus $516 million. So double beat. And they see Q4 2021 revenue of $536 to $546 million versus the $539 million estimated. And wow, that's interesting. I mean, look, they double beat. They ended up guiding up for Q4, and that goes to show how out of favor this stock is. They beat EPS, beat revenue, got it up for Q4, and the stock is down. The stock is down $6 after hours. That goes to show this stock is out of favor. People don't even care about it anymore by the looks of it. But when people are turning their heads on a stock, believe it or not, guys, that could be the time to buy. Not always, but it could be the time to buy. And full disclosure, I'm not buying Teledoc. I don't plan to, but if you're looking at it, now would be the time to dive deeper when the stock is down more than half. These are the opportunities to buy. Don't get it twisted. You know, when stocks are ripping like Tesla, it's up so much over the past year, couple years. You know, people think that's the best time to buy when the stock is going up like crazy, like a straight line. But the truth is, wealth is made when you're buying good companies at a cheap price and you ride the wave back up. Not saying Teledoc is going to rip back up. I'm just saying in general here. And for you guys, if you want to look at Teledoc, you got to do a deeper dive into it. So shout out to Teledoc. Hopefully, if you guys are in it, it works out for you. Upwork is another one that I'm looking at here, which is completely tanking right now. Look at that. It closed at 54.50 or 54.90. It had a 5% red day at the close. Now it's down to $51. So what did they do? Let's pop the live news tab up. They did 4 cents versus 1 cent estimated, so they beat EPS. Sales came in at 128.1 million versus 126.6 million, and they see Q4 adjusted EPS of -5 to -3 cents versus the -2 cent estimated, so they missed Q4 adjusted EPS guidance, and they see sales of 130 to 132 million versus 129 million estimated for Q4. Not bad. They guided up there. And for full year 21, they see sales of 496 to 498 million versus 493 million estimated. So not too bad, but the stock is selling off, and that's telling me that this was priced in already. And it makes sense considering Upwork went from $45 to $62 in the span of 2-3 weeks. I mean, that is insane. And considering it's dumped here, it's still up over the past month. If we're looking at where it was a month ago, Upwork was $44.90. Now it's at $51. It is still up about 15, actually more like 12% from where it was about a month ago. So Upwork, not too bad. It's selling off. Makes sense. And I'm actually seeing a head and shoulder here. Left shoulder, head, right shoulder. And now that we're dumping, we got rejected at the neckline. Head and shoulder pattern is still intact. So keep your eyes on Upwork. And the last one for today, guys, which didn't report earnings today, but I think this dip is decent. It's Coinbase, ticker symbol COIN. And full disclosure, Coinbase, and you guys on my Patreon know this, Coinbase is one that I owned at $270, and I'm completely out of the position now. I think I sold some at like $317, sold the rest of my position earlier this week. I think it was on Monday at about $325. Now we're trading at $311, $312. I'm looking to see if buyers step in right around this 50 moving average on the 4-hour chart, anywhere from $305, $310. And if it doesn't hold that point, it goes back into the 200s. Come to me. Fall in my hands, Coinbase. I'm going to be ready for you because I'll be buying back anywhere from 280 to 290. I'm all for it. And if it gets back to 250, 260, right by the 180 moving average 4-hour chart here, I'm going to be buying it there as well. So Coinbase, bring it on. Sell off, come to me, I'm going to be buying you, and that's pretty much it for the video, guys. So if you enjoyed it, hit the like button, subscribe, drop me a comment, let me know your thoughts, and check out my Patreon. If you guys want my real-time buy, sells, call-outs, morning update videos, more access to me throughout the day, all of that's on Patreon, link down below, or you guys can go to stocksurfest.com/Patreon, that's stocksurfest.com/Patreon. Make sure to also get your 2 stocks from Webull, your $30 from M1 Finance, those are also linked down below. And that's it. I'll catch you guys in the next video, which I did make one earlier, going over 2 stocks that are crashing right now, one of which I'm buying tomorrow. So go check it out. It is linked in that's actually not linked down below. It's popped up right here. So go check it out. I'll see you guys there. Thanks for watching again. As always, keep crushing the market. Stay safe out there. Peace out.